How's it going, Option Sharks? This is your option coach here. Today I'm joining you on a sunny day. As you can see, my background of the Pacific Coast. And today's a Friday. This is when Chairman Powell of the Federal Reserve shared his thesis on what he is projecting on his guidance for the upcoming FOMC meeting in September 17th. So yeah, the meeting came out a bit dovish. The market has reacted positively, and that's why you see the stocks having an upward momentum. All right, but nothing has yet been solidified. Okay, so just keep that in mind that the market's already pricing that in, but hey, we still don't know for sure if we will get that rate cut or not. Okay, so let's get to the topic of this video. So in this video, I want to cover about what stock that I believe can help you create a lot of wealth within the next 1 to 3 years. Okay, and obviously if you've been following my channel, you'll know which stock that is. If you do, put in the chat, right, what that stock that is, and either way I'll mention it over here. So that stock is Robinhood, HOOD. I am highly convicted in Robinhood. I am highly invested in Robinhood. I got over $250,000 of my own money in there. So and I'm not diversifying. I'm focusing on this stock to create and build wealth. And I could be wrong, right? This can also sink the ship for me, but hey, I'm gonna go with what my thesis is on and my sentiment on the stock itself. Now, the reason why I like Robinhood so much is because their team, they have a young team, they're innovating, they're expanding, they're creating partnerships, and they're also keeping up with the technology and the current AI revolution, crypto revolution, and of course the software revolution. So they're doing everything right, and they're also serving a global marketplace where they have clients in different regions of the world, specifically of course the US. They're in Europe and UK, and also they're looking to expand into Canada and other parts of the world. But the main thing is the fact that they are innovating, they're expanding, and of course if you ever use a Robinhood brokerage app or any Robinhood app, it is super easy to use, very simplistic. It's not a headache to understand how to use the features. So it's a very user-friendly platform. All right, so these are the reasons why I'm very bullish on this particular stock. And they're gonna have their Vegas event on September 7th, which is another catalyst that's gonna enthusiast the market around the stock itself, about the company and what their plans are. So keep that in mind. September 7th is the Vegas event, and this is where they will drop more news about what is coming ahead for Robinhood. All right, so other than that, this is my thesis on it. I'm also all in on Hood. If you agree with me, if you don't agree with me, you can put a comment. I would like to hear your thoughts. And then if you are in the market and you're trading options and you are not getting the results you want, or you want to increase your results, or if you're new, we provide one-on-one coaching, all right, when it comes to trading options. So stay tuned for the second half of the videos. You can see a live sample of me in action coaching one of my members. And of course, if you want to see how we work, you can book a time in the description, and also in the comment there's a link for the calendar. Book a time, you'll personally speak with me, and we'll see if we're a good fit, and I'll share with you exactly how we work, and I'll give you a virtual tour. All right, other than that, I wish you a fantastic day wherever you are, and I'll see you on the next one.
If I rolled out my put to the 8th at a 108 strike price, I think I collected, it was like $2,000 in premium. That with, yeah, so I did an in the money roll. So I collected like no, it was like, I have to double check. It was like $2,200 in
right
premium.
here, this program, remember the two boxes? On the right side is what you collected, on the left side is what's the contracts are worth now. You're up almost $7,000 and within less than a 2-week range since Hood started the volatility because of the pre-earnings volatility. But not only did you capture the premiums, but you're also getting post-earnings volatility. So
yeah.
You nailed it.
I did the math. So with $5,000 of premium, even if I get assigned at 108, which I know I'm paying a lot because it's what, like 105 right now, 106.
Yeah.
Even if I get assigned at 108, my average cost would still be $100.
Exactly. Yeah, it costs us still about the same. Yeah.
Yeah, my average cost would be, so if I would have left it at 105 and I would have let it get assigned at 105 with the previous contract, my average cost would have been like 103.
Yeah. And
so I was like,
yeah, the amount of premiums you have collected, your average cost would be actually 93.90. Because you have collected so much premium that your actual costs, they deduct the premium amount, the amount of premiums you collected. Your actual cost would be 94.
So I was good with this. I just didn't want to, it was just, it was so volatile right there. And I just wanted to like take advantage of what was going on. And I just wanted to be sure, like, even if I get assigned this, I'm fine with it because my average cost is still going to be somewhere where I want it to be, where it's like high 90s, $100 was like where I wanted to hold the average cost.
You got it. And I like your thinking process is because you're thinking about what's the worst thing that can happen.
Worst case scenario. Yeah.
Right. So the worst case scenario is actually if you follow that logic, it's not a worst case scenario. So it's a win. So you have to execute. When you could come to that conclusion, then the only thing left to do is to execute. Right. You gotta make it happen. These opportunities come and go. But the fact that you're able to spot this opportunity means you're starting to pick it up. You're starting to see the matrix. If I want to say
dude, you can't lose. You can't because when you think you're gonna lose, it's another win in a different position.
Now there's risk. Like God forbid, Vlad, the CEO, gets on the plane and somehow the plane just crashes.
Yeah,
and
of course.
And I told you guys from the very get-go.
But that's any stock.
I cannot protect myself or you guys from black swan events. But again,
you could trade in the S&P 500 and the United States could get nuked, and there goes our whole
there you go.
That's always risks.
There you go. Right. So just always remember that. Yes, it's pretty much like unlikely, right? But hey, but you just gotta know that. But overall, Hood is a great company. So as long as, and also they crushed earnings, right? I don't even know why.
That's why I thought it was so weird that it dropped to 90.
Yeah, it went up a little, then it dropped, then it went back up, then it dropped again. There's some games being played. It's like shaking out weak hands. In a way, it's just seeing that it's just shaking out the guys that are freaking out. Oh my god, panicking, and they sell. No, you stick to the plan. And usually those are the guys that are just training on their own. They don't have coaching, someone that's kind of guiding them. Then, hey, just hold on, just stay. You're good. It's gonna play out the way it's gonna play out. Just let it be, right? But when that happens, it shakes out a lot of weak hands, and it creates opportunities for guys that don't freak out and panic sell, right? So you did. This is phenomenal. Now you do have another 3,000 unrealized gains to collect. So right now you're already up a certain amount. So if you were to close the contracts now, you pay 3,100, but your actual profit, if you go down on the your 6,783.
Yeah.
Okay. It's really good for 2 weeks time. Okay, so this is really for your portfolio size. Now, like I told you this guys a long time ago, this is rare. It's because there's pre-earnings volatility and post-earnings volatility. There's volatility.
And catching the wave.
When there's around earnings, there's always a lot more premium to be made, a lot more. But you got to know you got to be strategic around that, right? What strike price to choose, so on and so forth. But really, Robinhood really trains range now. It really sticks in the 95, 101, 102, 105. Actually, if you want to be wider, it's 95 and 105.
That's what I noticed.
Yeah, and when it breaks 105, it usually stays above 105, which it broke 105. So you may not even get put the shares, even though you want to get put the shares. Because by Friday, if it's trading 108, you're like shit, right? But again, don't get greedy, right? Don't start selling puts higher and higher. You get what I mean? 108 is already. Actually, I said 110. I remember I told you guys on another coaching call. If you want to be very aggressive, 110, right? 110. If you did a 110 play, you probably collect even more premium, right? But it's okay. 108 is good, but it's already after earnings. This is already post earnings, so I don't. If it does go above 108, I don't recommend selling another put higher. That's just my recommendation. And just. We'll evaluate from there, right? How high does it go? But we'll kind of decide from there.
So you want to leave this position?
Yeah, more importantly is also I wanted you to also build a position on Hood as well, because I want you to get assigned too, because Hood is a good stock. Like I'm holding the stock, I have a lot of shares. I have 900 shares. In one portfolio, another 400, so 1,300 shares. So it's good. And I actually closed out so the other one I closed out for 10 grand plus, and then this one right now that I have in my Hood account, I'm up already. Let's see, 5,750. Right. So and I'm just holding on to it, but. Yeah, actually, I would much rather you get assigned than Hood blowing past 108. It would be very transparent.
Well, I was during these volatile moments it's been having. I was looking to try to roll it to a lower strike price, but I just didn't want to take the loss because they would say I would debit, right?
No, there's a credit now.
There's a credit now for 106.
Earlier you're saying there's 4.13 is what you pay to close, and then rolling down.
See, it keeps changing. Earlier saying I would have to pay like a $200 debit.
Yeah,
and now it's at $400 to just roll it for. Oh, but I'm sorry, I have the wrong date. That's what it was. So if say I were to roll it to like 105
now you're gonna pay
with the same expiration. Yep, there it is. That's what I was doing.
No, but that's not.
Yeah, I don't want to do that.
There's a high likelihood you may not get assigned at 108 because it's already Monday, and a lot of it's having a momentum back up now.
So it might just expire worthless.
There's a high chance. They're $2 away, right? And Hood is again, they're doing everything right, so it's not really concerned. But if it goes, let's just see how it on Friday. I would much prefer you get assigned the shares, because then when you have the shares, you realize all the upside. Once you get assigned the shares, not only do you pocket the 7-8 grand, but you also now own the shares, which allows you to sell cover calls more out of the money. Don't be aggressive with it. Hold on to Robinhood shares, sell cover calls at like 115, 120, get paid for ownership, and realize all the upside from your cost to what's in between the strike. Okay.
Yeah, I did want to ask you. I should have probably asked this earlier, but I was a little busy while I was watching your call earlier. I just wanted your insight, opinion. I've been looking into Palantir. I know there's a lot of people that are like crazy about Palantir. The only reason why I bring it up, it's just because their premiums are insane. And I'm not trying to premium hunt or get money from it.
It's pre-earnings.
It's pre-earnings, that's why?
Yeah, because their earnings
that makes sense.
And today, I said that today. I shared it in the coaching call in the morning.
Yeah,
I said HIMS and Palantir. These two companies are having earnings call after the close of bell. So HIMS and Palantir are going to have high volatility. The problem with Palantir, it does trade a bit range bound, but during earnings, it could be a good earning and dip. Like Robinhood had good earnings and a dip, but it didn't dip so much. Palantir, the things with Palantir is that it have good earnings and dip a lot. Like the gap is quite wide. Okay, so that's why that
makes sense.
So it's more of a 50-50 coin flip, because it could be strange shit, man. Bad earnings, stock goes up. Good earnings, stock goes down. All kinds of weirdness. But you'll see the volatility is extremely, extremely high.
Yeah, because I was looking at like a $150 strike price, and that's $500. I was like, holy shit.
Yeah.
Like,
But the thing
but
is, I would
it's
go
very
much,
volatile.
I would go much lower about Palantir.
Even though
I'll
like
go by like
140.
the 250 range, 240, 223 range. Yeah. I'll stay far because look at that. 140's put is 20 points away, 160, and it's still paying $223 per contract. That just tells you like Palantir, when it dips, it dips. Like it's just you can get wrecked. So if you, especially if you're doing spreads, but if you're doing cash secure puts, it's okay. And also you can do cash secure puts at 150 if again you're okay with owning the shares at 150. Okay. If you like Palantir and you don't mind getting signed at 150, okay, that's you. That's up to you. Okay. But you can see how that the dip is. But it's a momentum upwards, but it does dip. Like let's just see that gap, right? So it's 130, and then on the left, go left to that yeah. So $14 gap. Okay, and you see Hood did not move like $14 gap. Hood actually, I would say less than $10 gap, even with
it has big dips right here, like 119.
There you go.
Yeah, it does have huge
about
dips.
11 gap there. So it's just bit, but overall, long term, it's an upward trajectory. The revenue, the earnings will be good. They make bank. They're software. Software, once they're in your system, you can't uninstall them. You need them forever. That's why software as a service is a powerful business. And that's why you sell for high multiples. And then when you have the government as your customer, they're just not gonna bounce. You know what I mean? They're not gonna write. It's not gonna happen.
I think they have like a $10 billion contract with the government.
They're Palantir's super company. I remember when they were back $20. So, and I had Palantir a long time ago, just wasn't patient enough to wait it out.
True.
All right, so let's see. Your Mara, you have a 19 put. You probably need to roll. It's getting close. It's stock recovering though. It's at, let's see.
I do have it set for the 8th.
Yeah, this one needs to be rolled. Depending on where it is on Friday.
Okay, so leave it here and see where we go on Friday.
Yeah, but actually Thursday. We need to roll on Thursday. I don't Friday you might get put the shares because if it happens. So Thursday to see depending on where the stock's trading at.
Actually,
19 will roll it.
I'm gonna put it in my calendar for Wednesday the 6th, only because that day I'm gonna be standing up in a wedding.
Oh, okay.
So I might not. I'll put it for both days and see how busy I am. I'll try to roll it on the 7th, but if not, I'll just roll it on the 6th. Roll tomorrow. We'll just leave 19 strike and just roll it out a week.
Same thing. Move it out
1 week.
That's right.
Okay. So I got that in the calendar to remind me. Yeah. And then we got Pony.
It's getting close because it's trading at 14. And same thing. If it's still under 14, roll it, but you're like 11 cents away. So once Pony, so two things can happen. If Pony trades above your 14 put, that's just why I keep telling you guys rolling puts are so powerful. Is because in this case, you're already in profit zone. If you look at the market value, it's only 336, but the average credit was 140. So you have got paid $140 times the number of contracts. Contracts are now worth only 55. So if you were to close out today, you would release the collateral and pocket $510. Okay. Now, so what you can do is, if you do want to realize the remaining 300, which is 330, then either Wednesday and Thursday, if Pony's trading above 14, you can roll the put for more income. Actually, both directions. If it's still below 14, you roll the put. If it's above 14, you can buy the close and get out of the trade and just not have Pony anymore. Or you can roll the put again to make more money. You follow me?
Yep.
Right. So three things. You could Wednesday or Thursday, if it's trading above 14, you can roll the put to make more income. Second thing is if it's trading below 14, you can roll the put again for more income. Or the third thing is if it's trading above 14 and you want to get out of the trade, buy the close, pay the market value, and then and you'll pocket whatever difference that is, and then you're out of the trade.
Got it. Okay. Cool. I did get assigned
Archer or no?
No, it was one Mara. For some reason, I got assigned a Mara, one contract out of the 4 puts that I had.
Yeah,
that was really weird.
Wednesday, Thursday, because there's people looking to get assigned means that they decide to take the shares, right? They want the shares. Well, they want to get out of the trade early. So let's look at your cost on that one, the Mara, which that means you can sell cover calls on, and then go down 17.
Yeah, so you
can just sell cover call at 17 for this week, and then just one contract. This will let you generate some income from ownership. Yeah, so it's only $16, but whatever. Yeah,
money's money.
Yeah, so just go with that, process that, and then that's good. Yeah, and that's it. And that's autopilot too. You can just let the shares get. If it goes to that strike price, you can just let it get called away. You just the one of the shares will just leave your portfolio, right? Sure. And then the capital will go back to your portfolio. But if it doesn't get called away, you just keep selling cover calls at 17 call. Yeah.
And then I thought I had a cover call on Hood, but I guess it expired.
Probably expired out of the money, which you want to sell cover call. You can go with 120, or if you want to be more aggressive, 150, slightly aggressive, 115. I currently have a 115 myself.
Let's see. And we'll go for the 8th?
Yeah, sell call. Change to sell call.
Sell call, here we are.
Yeah, I'm going to do that.
115.
$70.
$70.
Yeah.
Okay, I'm good with that.
And that's good. You're like the other guy, Sam, who sent me a box of cigars. Making money on Hood always. Making money on Hood by owning the stock, running the wheel strategy, making money there. Now selling cover calls. You're just making money on Hood always.
Just Hood. on the same website. Got to make work my $5 gold membership worth it.
Yeah, so that looks good. Let's see what else. Yeah, so that's the game plan. Put
We got a little buying power if we want to mess around.
I think that is I think that's with margin, but in order to really know what it is, you can type in Archer, ACHR. I saw some.
Is this margin? Is there a way we can look if it's margin?
I don't know why it's not clear sometimes, but type in. But if you go to open a trade window, then it'll tell you your actual buying power, right? So let's search ACHR.
Archer.
Yeah.
ACHR.
And then that would look at let's look for trade options. So we saw 7,300, right? It still shows it, but once you hit trade options, it'll be a different number. See, now it says 36. So sell put, 10 strike. Yeah, that's good. $20. You could do 3 contracts up, you get your 60 there. $10. One option collateral for Archer is 1,000, right? So that's why you have 3,600 to work with, so we can only do 3 contracts. And it's about 60 right there. There you go. You are all maxed out. All right. And then just make sure you know the game plan for Wednesday and Thursday.
Okay. If for Archer, anything you want me to do Wednesday and Thursday, or we might just want to let it expire?
Yeah, just let it. It's going to be fine. We don't need to work. Okay. Depending on if it dips, actually, yeah, if it dips below 10, then we need to roll the put.
We'll roll it forward.
Yeah, just keep doing the same strike, but moving the expiration day out.
Sure.
Yeah, so that'll be the game plan. Just kind of like what you do with Pony. Right now, Pony's in the profit zone, so yeah, that's why rolling the put is so much better to get beside. Let's see. Yeah, everything looks good. Perfect. Your portfolio is super organized, super clean. I mean, if you look at the picture of it, it's just going in one direction. So, but we got to stay steady, right? Don't get caught up, right? Not because I know it's like when you start making a lot of money and you're like, oh shit, you feel like you're unstoppable. That's why I said don't think about selling put on a higher put, right? The 108 put that's it. Like anything beyond that really depends on how high put runs. Okay.
Yeah.
You're like,
and my only thought process was for the 108 was even if I get it, I will still be at $100 average cost. So I was like, I felt like it was high, but when I did all the math, I'm like, I am still safe because I could sell cover calls with $100 average cost.
Correct.
So that's why, but I still felt like when I was doing it, I was like, I'm going too high.
Yeah. But just think about the checklist, having checkpoints and checklists. If the numbers make sense and everything checks off, the only thing left to do is execute. That's it, right? Don't forget, throw the emotions out of the way. Does it check this? Does it check this? Does it check this? Okay, check, execute. That's it, right? And you know, I coach a lot of people. You did this very flawlessly. Like I'm gonna be very transparent, like very flawlessly. But not more than 108. Like that's it.
Okay, yeah.
You did it perfectly. Like 108 that's it. Like if you did 110, I'll say, man, you're pushing it, but 108 is that's it. That's the threshold. And yeah, in this case, and then just let it play out this week. Because I don't know if you're gonna get assigned to shares or gonna be out under. If it's under, then you could just keep free rolling that 108. Same thing rolling the put. You know what I mean?
Yeah.
So if it's under, just keep free rolling your 108 because the premiums. I'm curious to see how much the premiums will be this week because it's post earnings, but we'll see.
We shall see.
Yeah. Cool, man. So awesome.
Yeah. Just want to hit 100. I want to hit 100K before end of August. We're right there.
I'm pretty sure you will. I'm pretty sure
that's the goal.
Yeah. As long as the administration doesn't do anything funny. Okay. Because we got a special man in office. He could throw his left field type of things, and then we're all we all gotta buckle down
with these tariffs.
and race in for the right. Yeah. But overall, he's been pretty calm, right? Besides firing the person from the
jobs.
Yeah. But I don't blame him for firing because how the hell you revise the numbers and you revise it by that much? Like the difference is like hundreds and thousands of the numbers are
huge numbers.
Yeah, like something's like how the fuck you miscalculated by that much? Like, and we have all this technology that can count stuff for us and AI and everything. So strange. How much you started with me too when we first started? Here's your portfolio. 80, huh?
So I think we're like 1 month now.
Yeah. So let's just see that. Around 90 maybe.
Yeah, I think we're like right around 90, and then we're at 97 now. 97.6.
Let's see. We started on June 30th.
June 30th.
No, there you passed it. Yeah, remember.
So 90.
Right on 90. Yeah, cool. Awesome. All right, good. So yeah, there you go. You can see the progress being made there.